Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Monday, March the 6th, the year is 2023. Let's talk trading. How to fix your trading problem, part 5. These videos are for educational purposes only. Your results may differ from mine. Okay, we're talking about trading problems. Let's start from the beginning. I've talked about the three-legged stool of trading. First leg is risk management. If you were just starting out to learn how to trade, this is where you begin. You decide how much you are willing to lose per trade, and you make sure you don't lose a penny more. That's your goal. And how do you do this? You put a stop loss on. And if you can't seem to do that, then you have an EA that automatically puts stop loss on any open trade. That way, the only way that you don't have a stop loss is you turn off auto trading. So that's step one. Step two is you got to get your brain right. And this is probably the hardest out of the three, because this is all about you. You know, the money management, you can read about it and you can set it up real simply. You know, a system, a method, you can find them all over the internet for free. Right here, I've given you, I don't know how many, maybe half a dozen. I've lost count. But the brain, you know, the person in the mirror that's looking back at you, you've got to work on all these things. And how do you do that? First, you identify what your problem is. If you're always anxious and you're rushing, sounds like you've got some FOMO happening. On the other hand, if you're hesitant, then you probably have a fear of losing. And all those come from what's going on in that gray matter between your ears and your head. Because you're interpreting something that's going to cause you pain. And what do? As human beings, we tend to avoid pain. So you don't get into that trade because you're afraid you're going to lose. Well, guess what? Trading is losing some of the time. It almost can't be avoided. I mean, sure, you can have a day or a couple days in a row, no losing trades. But sooner or later, the smart thing to do is to take a loss. Once again, stop loss. Because you don't want to see a 5-pip loss turn into a 50-pip loss, into a 500-pip wipe your account out loss. So the brain management, that's a biggie. And, you know, along with that, you know, as I mentioned, there's a thought or belief you have about losing or about entering or about something. And that's messing with your feelings, which messes with your attitude, that causes you to take behavior or action that causes you to either miss out of a winning trade or to stick in a losing trade way past its time. So you got to work on this. The money management, you take profit before the market takes it back. I was trading with Walmart. He's kind of under the weather. His allergies are kicking his you-know-what. But, you know, there was a couple of trades where I got in. I took my 2 pips. Why? Because the one ball appeared. And I have a rule. My rule of thumb is, for whatever reason, when I see a 1 ball, I better get out, because the chances of it pushing up usually are slim and none for me. I mean, sure, there's plenty of times when it does, and it's like, oh, I should have stayed in. Nope, I shouldn't. And you see right there, how you talk to yourself is going to cause you to act. So I have to reinforce, hey, you know what? I did what I was supposed to do. I got out when I saw the one ball or two ball or three ball in front of me, because otherwise it's going to come back and I'm going to wind up, giving up some pips that were right there on the table for me to take. And then market just takes it right back. Okay, let's get into the charts here. The pound is at 120.08. It is 12 pips below the monthly open right now. You can see the month is red. Been having fun with the double O trades this morning, that's for sure. And we've got a bunch of gaps that haven't filled, look like the Aussie pairs. And we've got a Swiss pair, the New Zealand here. Let's see. Aussie, New Zealand filled. But yeah, some Aussie. They must have had news or something. And shout out to Freddie, your Euro. It filled. Yeah, I've known Freddie for a long, long time. In fact, I met him in Puerto Vallarta and hung out with him for a while. That was fun. So we can see right here we're below the open for the month and the week. Open for the year, I believe, is up here. You can see all these opens and all this stuff is just writing on top of itself. We're putting in the opening range for the day right now. 2047 high, 1992 low at the moment. So chances are sometime we're going to be breaking out of these ranges here, these opening ranges. For the year, 80 pips below the open. And let's see, we broke out of that inside bar that happened 8 days ago, the daily inside bar, still in the weekly and still in the monthly. Last month was an inside bar, 2 weeks ago was an inside bar. You can see lots of inside bar action here on the dashboard. And 55 pip range for the day, really anemic. We've only got 4 pairs over 100, but that might be because of all the news and FOMC stuff happening this week. We've got ADP, we've got FOMC reports, we've got NFP on Friday. So it's going to be a crazy week. Time to make some pips. As you can see here, we crisscrossed that daily weekly open, hit that buy zone, turned right around. We're in the short zone right now. And that's another one I had shorted about, I think at 25 or something. Took my 2 pips. I saw the one ball, and then the next candle pushed down. But once again, you have to trade what you see in the moment. Follow your rules. So I was definitely in the 1 to 2 pip scalp mode, even though my bias for the day was short. But last night I traded and I got myself all tied up in knots, and so I wound up about plus 11 or 12 pips for the session. But I took a loss because it was time for me to go to bed. And I even taking the loss, I was still up. So it's like, let's just take the money off the table. I was long, and I got out and I checked one more time. Had I waited about 5 or 10, I could have gotten out of those trades at break even or a tiny profit. But you know what? That's just trading. There's always going to be another trade, so there's no reason to fear that, oh, I missed that trade. Well, there's going to be another trade. Rat zone is, or the range is large enough for rat zone trades, but you can see there's not much separation between the zones. And we took out the weekly pivot. Looks like we took out the daily pivot. Bambino says trade long near the pivot. Bias is long. Near S1 down here, bias is long. But looking at this chart here, we're in the wick zone of this 4-hour candle here that just closed. So if anything, I look to take the break out at the top or the bottom, or just play the lower wick zone at the time. Now, we're talking about how to fix trading problems. Chances are you probably started out trading looking for a method, and then you kind of started hearing about risk management, money management. Maybe you put a little something on that. And the psychology, you probably didn't look at that at first. So what happens is that, to me, things kind of get learned out of order. The method should be the last thing you learn. So I've got the sweet spots gold indicator here set up. Every 25 pips, we got the yellow line, the psycho lines. And then we've got the gray lines, the sub ones here. I'll just show you how I did that. Set to 5 main levels, 25, and just changed the colors. Turned off the buy sell, the Walmart buy sell. And so what do you do here? Well, you look to trade at the line with the candle color. And as you can see here, this last hour, if you traded at the line, there was only an opportunity to take a couple pips. So right there, that shows you why you have to take the pips. Now, if you traded a couple hours ago, you had a chance to take 5 pips, almost 10. So every 5, you can see here, it either crosses the line or it doesn't. It either closes above or below the line. I mean, that's all it can do. So right now we're short, or we're looking to go short at the double O, because these are the only places that you can take trades at the yellow lines. And then hopefully you get to a gray line or two. And so this is learning. This is learning your stop loss. This is learning your money management, taking profit when you can. The method is just trading with the candle color at the line. It's not hard. I've got it on H1. You can shift down to M30 if you want, or you can even go down to M15. But if you're learning or struggling, I wouldn't go below M15. But this will teach you patience, discipline, and this is how to get over it. Don't worry about some other fancy method or Renko blocks or any of that other stuff. Not even indicator 2 or some of the other things, flip-flop boxes, the stuff that Walmart and I do and show. This is starting from scratch. This is correcting problems, because you see here, if you can't do this, then you probably aren't going to be successful with any other method. Because what's this going to work on? It's going to work on your brain psychology. It's going to work on your money management. So you could simply say, hey, I'm going to look to take profit here, but if the candle color changes on me, or if it crosses a yellow line the other way, I've got to get out of that trade. And this isn't about really making lots of money doing this. This is fixing your trading problem, because chances are the problem isn't with your method. So that leaves 2 things: your money/risk management, or your brain psychology. You do this, it'll point out where your problem is. Because if you can't wait, then you've got an impatience problem. You're going to have to figure out why. So, fellow traders, I hope that helps. And I hope you have a profitable week. But really, if you're struggling, get the method out of the way, because that's probably not the reason you're failing or losing. Find out, is it you or is it your money management? Because it's not what you trade, it's how you trade it. So go out there and drain the banks. This is TheRumpledOne, over and out.